Welcome back. You're watching Trade of the Week. And join me now for a technical analysis on Life Healthcare. Sibanye-Stillwater and Northam Platinum Holdings is a founder of Herenya Capital, Petri Redelinghuys. Thank you so much for your time, Petri. It's always interesting doing Trade of the Week because I feel like a lot of the time there isn't really a theme, but really just a case of diversification where you look at stocks in different sectors. And of course, nothing more different than healthcare and commodities.
Right.
So
sometimes there's a theme.
Yeah.
Most of the time.
Yeah. Well, let's actually start with healthcare, and Life Healthcare has actually been a very interesting story. I mean, Life Healthcare and Netcare, because there seems to be some subdued trading, subdued sentiment, and with Life Healthcare, even though there does seem to have been obviously this distortion of a special dividend that they gave out after the sale of its AMG business, but there seems to be just a lot of negative sentiment. They even released, I think, was it a trading update last week or 2 weeks ago, and it seemed that everything on the surface was all right. You know, their revenues are up, although you did kind of see their costs kind of affecting the business, where core profit was actually, somewhat under pressure. But everything on the face of it looks good. But that share has just not been trading on good ground. What does that chart look like?
It has been absolutely pummeled. So for the sake of understanding and I suppose being able to actually read the chart, I've switched to a 1 hour chart. If we use a daily candle, I'll show you what that looks like. There's that massive special dividend, right? So it's very difficult to kind of glean anything from this chart really, because the amount of because this gap kind of really distorts everything. So we'll switch to sort of a 1 hour chart for this.
Okay. And that's better.
Loads. And then that's a bit better. We can then cut out that section and actually have a bit of an idea of what's happening. So this is a much shorter term time frame, obviously every candle here representing only 1 hour rather than one whole day. But it gives us the basis for being able to put a trade on. So we've put a trade on here on Friday essentially. So full disclosure, all of these trades that I'm about to mention, we took either this morning or on Friday afternoon.
All right. I mean, it's fresh, so.
Yeah. So these are the good ones, right? You want the stuff that's that we've essentially just gotten into. So what we're doing here is we're basically buying it off of this 10 Rand support level, that 10 Rand support level being our stop loss. If it slips just below that, we'll stop out there. And we're looking for it to go back up to what's called the swing high. So essentially, we'll compress this a little bit. So essentially these highs over here is kind of what we're looking at. 11 Rand 50, 11 Rand 60 is kind of our target range. 11.55 is where this is set up, but it's not the exact level. Anything between 11.50 and 11.60 we'll be quite happy with. And we've got a decent risk reward ratio here. That's quite big. If I open this, I think this one comes in at around 1 to 5. Oh wow, this is massive on a hourly candle. It's just going to keep scrolling. So there you go. So that risk reward is 1 to 3.9. So it's a very, very nice risk reward ratio for us at least. And we are kind of bottom picking and kind of buying into really negative sentiment. I think that it's interesting to see there's an investment conference happening now over the next couple of days. And I was watching a little bit this morning, taking part, as a spectator to the conference, the Zoom thing. And a large theme amongst sort of 3 out of the 4 major asset managers, the big ones, the Alan Greys and so on. Most people are very bullish South Africa. And this is something that we've been saying here as well, where the sentiment around our stocks and our economy and everything has been so negative that we have a huge amount of companies that are just super, super undervalued. And we have a situation where companies, seemingly decent news comes out of a company, there's a bit of an earnings hiccup, and the stock gets sold down. And you can see here, on that day, that was this big red candle here, was when that trading statement came out that wasn't well received. And we take this essentially as an opportunity to potentially get in. And look, if you look at it on this context, it looks like it's a wild trade because of the size of this move. But I think we do have a relatively decent risk-reward ratio in place here. And we are bottom picking a little bit, but for a trading portfolio, we think this is a great opportunity.
It seems that, any blip, just a drop in the ocean becomes a very big ocean for the markets. And just talking about just the sentiment around South Africa. I mean, I know that that's maybe just part of the educational segment, but I guess maybe it's good for us to talk about it now, because there's obviously this umbrella of there's election risk in the market. I mean, we've even seen this year very low liquidity on the JSE, but it seems that healthcare is particularly one of the sectors where there's just a lot of focus on election risk. How much of that have you seen in terms of life healthcare? So
just to explain maybe why that's happening, right? But I think a large part of what we're seeing in the campaigning is, after the elections, all hospitals, doesn't matter, where you are, what illness or what ailment you might have, just go to the fancy private hospitals, government will pay. So that's that NHI situation thing that's happening, and I think that that's obviously creating a lot of fear and a lot of risk. Probabilistically, I don't think it's going to go through. It's election promises. Hey, have you noticed for the last 40 days we've had electricity?
Of course.
A casual 25 billion rand a month worth of diesel being burnt, but at least the lights are on, right? So I think it's just electioneering, if you will.
Yeah. And I mean, it's quite interesting, this fear around the NHI, because we know that our government comes up with promises, but then the implementation takes very, very long.
Well, or doesn't happen at all.
Yeah.
In most cases, I think. So I think that we need to be cognizant, and I mean, I don't want to get too political, but it is time to think very carefully about who we vote for.
I mean, but how does one then place or position themselves in the markets with this risk and then with added geopolitical tensions as well?
Well, okay, so this goes into sort of scenario settings, right?
Yeah.
So you would look at different types of scenarios. Let's say, for example, the ANC has an outright win versus the ANC doesn't get a clear majority and has to do a coalition, which is the most probable outcome. Then you start looking at different coalition partners. If they partner with EFF, if they partner with MK, if they partner with DA. And you can try to then sort of build scenarios around what do we think is going to be the best for economic policy, what do we think is going to be the best for economic stability, and then to start trying to build scenarios around, well, how do we think the rand's going to react under that situation? How do we think the equity market will react under that situation? So for now, I think that we're kind of pricing in the worst, if you will. I think if we see sort of, for example, an ANC-DA coalition forming, we've seen them do this in the past, not very successfully, I'll admit, but we've seen them do this in the past, and I think that the ANC would be more likely to do a DA coalition than an EFF or MK coalition.
Yeah.
At least that's what we think now. And that would be a very good outcome, I think, for our equity market, because at least in that scenario we have almost a guarantee of policy stability.
And certainty.
And well, maybe not certainty. There's going to be a lot of fighting and a lot of disagreement, but because there's not a clear outright majority and we're being ruled by a coalition, it's going to be very difficult to change policies. It's going to be very difficult to change rules. And this is something that business might be quite comfortable with, because they might say, well, okay, we're not necessarily, so the chances of the NHI going through drops. The chances of some sort of a anti-business, new government policy going through drops.
They're not shocks.
So it creates a bit of stability, or a no man's land, if you will, and that is what business is going to. We've seen before, if government leaves businesses alone, they'll find a way and they'll grow the economy, right?
Yeah, true.
I mean, if you look even at the electricity supply situation at the moment, yes, load shedding is alleviated and all those things. A large portion of that is because demand for electricity is just less. Why is that? Because private businesses come in and put solar panels everywhere.
Yeah.
Right? So if you leave us alone long enough, we'll fix it, right?
Okay.
So I think that is probably the best outcome. But then you want to build scenarios for every type of eventual outcome, and then you can start planning around, well, okay, if this is the outcome, it's going to be negative for the mining companies, it's going to be negative for this and that, whatever. And then you can have a sort of a reactionary type thing. I think we're doing the educational portion in the beginning of the show.
I mean, I just wanted everything to link.
So you do this sort of this planning stage. So going into the election, it's maybe wise to have a bit more cash. We've got locally in the local portfolio about just over a third of the portfolio is sitting in cash at the moment. So we're ready to react to stuff when the opportunity comes. And I think if we look at, I think what the consensus sentiment is around some of the larger asset managers in South Africa is that at least for the next 12 months, there's an extraordinary opportunity here. You might not necessarily want to, plan have your retirement funds wholly 100% exposed to South Africa. Everybody wants to invest offshore. That's fine, probably still wise. But for the next 12 months, South Africa is kind of the diamond in the rough, right? We don't think the election result is going to be so bad that everything's going to collapse in a heap. The risk here is to the upside, that the election result is actually better than we anticipate, and everything runs. And in that situation, you want to be able to react quickly and buy into stuff, the locals, the SA stocks, companies with SA South African exposure, the healthcare stocks that are completely battered by fear at this stage. When the election result comes out, and it is actually quite favorable, at that point you'll see the healthcare stocks run, you'll see the banks run, you'll see the retailers run. I think we'll be in a very good space for at least 12 months.
Okay. Well, something that I think is maybe not as clear is the commodity space. Sibanye-Stillwater. But I mean, just looking at that commodities index, it did very well in April.
Sibanye has been a bit of a runt of the litter for some time. We've seen the other gold stocks and the other platinum stocks and the other sort of diversified miners really perform well. Sibanye has not been performing that well.
So it has not filtered through to Sibanye?
I think Sibanye has had a number of their own challenges. We've seen that, Neil Froneman, shame, I feel for him, because sometimes he is the hero of the market and the wisest man at the table, and sometimes everybody just hates him.
It's very easy for you to go on the other side.
Kind of goes, from pillar to post, and there's that waning of what people think of him, or waxing and waning. So, what's interesting is that they've obviously had a reduction in earnings. We've seen Froneman actually take a pay cut as well, a massive one, right? Which I think speaks volumes. When times are good, earn the money. When times are bad, ease up. But look, still, I think it's like 30 million rand a year. It's still a chunky salary, right? I don't think either of us would mind.
Yeah.
But
half of what the Capitec CEO.
Yeah, true enough, I guess. But so it's been a bit of a tough time for them. But I think that sometimes we have to admit that following a visionary leader isn't necessarily always easy. And he's taken a company that was essentially the scraps of the South African mining industry and turned it into one of the world's biggest producers of platinum and gold, right? So I think stay the course. What we have, however, is a technical trade. So again, supposedly, I suppose we could argue that we're picking the bottom here. I'm just going to add my moving averages back.
And the thing what's been interesting with Sibanye, obviously we expected retrenchments in the PGM space, but now the fact that they're even retrenching in their gold operations when the price is so high is also very interesting.
So in any case, what we have here is a bit of bullish divergence. So again, we're downtrending and we're kind of trading against the trend here. We are obviously very bullish on gold and all the rest. I think we've spoken about that long enough on here to be well known. So what we essentially have here is a bit of bullish divergence. So on the stochastic oscillator, we have lower lows, and over the same time period, we have a bunch of higher lows, right? So that is essentially, imagine it's kind of like a momentum indicator, and it shows like it's an elastic band. So the market moved back, a few percent, and that elastic band pulled back even further. So it's building up a little bit of energy to kind of push it forward. So our trade here is again just looking for the swing high, so 27 Rand 30 around there, or 27 Rand 20 even, or even 27 Rand would be great, and that gives us a 1 to 5.4 risk reward ratio. So you could kind of stop out right here under this 20 Rand 60 level, which is the low from a few days ago. I'll zoom in a little bit to make that easier, with a target price of sort of the swing high around that 27 Rand mark. And that's, we think, is going to be a relatively good trade. Keep in mind, this is a very short-term trade, right? So we're in this for like a week or two, and then we're out. So we're not really saying that this is that trend change moment, but it could be. We're taking the lead from another platinum stock, which we'll look at in just a second.
Well, let us go to that Northam Platinum, actually one of the favorites when you ask analysts for the stock picks in that PGM space. What does that look like?
So let's start here with a slightly longer term chart. So, okay, wait, we'll just stick to the daily chart, never mind. All right, so what we're essentially looking at here is it's tried to get above this 200-day moving average in the past and failed a number of times. But once again, it's trying, right? So we're kind of, this is that trend change essentially play that we're doing. So we see price really break above the 200-day moving average, which is the thick blue line here, very strongly. It comes down, it tests that 200-day moving average, bounces off of it, or is holding above it at this stage. So we think that potentially we could be seeing that sort of push to change the trend here. We also have two higher highs here, and if this manages to break up and push another high, then we'll have higher lows as well. So we're trying to get in on the trend change a bit early. We didn't chase it when it broke out here, but now once it's retested the 200-day moving average and actually managed to hold it, you see it failed there, it failed there. Previous times it failed as well. And this time so far it seems to be holding. So if we get another push up to this swing high, we think we could potentially have a bit of a trend change.
But also in the short term.
But in the short term, we just want to trade it from where it is now to 150 Rand. If we get below this 200-day moving average again, which is kind of 122, call it 121.80, below that you would stop out. And your target price here is about $150. So we're again looking at about a 1 to 3 risk reward ratio. So again, for a short term trade, on a CFD or whatever the case, we think this is a good risk-reward ratio and an attractive entry point. And if you are, for example, willing to hold it a bit longer, what one strategy could be is you could say, let's say you want to buy, say 300 shares for sake of argument, buy 100 on equity to have and hold forever if the trend changes, buy 200 on CFD to sell at $150, bank some profit, and then you have your at least core position that you can hold on to should this thing essentially change trends and sort of run towards 220 Rand.
All right. I think next time, especially as we're heading towards that date, the 22nd of May, we need to check out Amplats.
Okay.
Because that's quite an interesting one, of course, with this whole potential corporate action between Anglo-American, BHP, and obviously what that, the implications for Amplats, and obviously the pressure that is expected there. So maybe just...
That's a good idea. We'll look at that whole sort of buyout situation, how you can trade that, how you can play that, what to look out for, what to be careful of. Because multi-choice, I think, I just want to quickly go back to that, was something that there was a bid out on as well, and we put it as a long idea here. And as we can see, that's kind of, we're out of this trade by now. So I don't know if you'll show that chart in a second, but we're basically gotten out of this trade. There was the break above this when the news came. It came back and sort of gave another opportunity to get back on the bus if you missed it. And then it ran, and we managed to get out of this trade already. And from here, it'll sort of just grind out sideways until eventually, the deal is finalized.
Something happens, yes.
But we can look at Anglos and Bulletin and AMS as well.
All right. Well, thank you so much for your time and for your analysis today, Petri. That was founder of Herenya Capital, Petri Redelinghuys.